Hey guys, here's a company I wanted to go over. They recently released their first quarter 2022 financial results on May 12th, so just a little while ago. This company, Curiosity Stream, they're not necessarily a good investment yet. They're not profitable like a lot of the companies we go over here. However, I really like their business model. If you've ever had a chance to watch anything on Curiosity Stream, they mostly focus on documentaries, natural National Geographic type stuff. They have a lot of history, nature, planets, um, different science type films. Um, you could, there's something on there for everybody to watch, and I like the education aspect of it. So I figure I invest in it, and if that helps out even a little bit, then that's fine with me. So we're going to go into their most recent quarterly report. And here they say first quarter 2022 revenue of $17.6 million, which is up 77% year over year. Cash, restricted cash, and short-term investments and debt securities balance of $85 million. And announces intent to expand distribution promotion through additional free ad-supported streaming TV later in 2022. So in case people don't want to subscribe, they can subject themselves to watching ads and still support the business. So let's see what they got here. They had reported 9.9 million in the first quarter of 2021, resulting in the increase of 77%, and total paying subscribers of approximately 24 million, up 50% year over year. Gross profit of 5.8 million compared to 5.7 in the first quarter of 2021. So that's, even though they had this 77% increase in revenue, their gross profit only increased $100,000, and they had a net loss of $15.9 million compared to a net loss of $18.8 million in the first quarter of 2021. So they are minimizing their, well, hold on here. Let's see. Technically, as a ratio between their gross profit is not, their gross profit margin is going down. So they didn't burn as much cash this quarter, but they damn near doubled their revenue. But there wasn't a equal, almost doubling or retraction of 77% of the operating expense. So their margins have gone down. And they have earnings before interest, taxes, deductions, amortization of 19.3 million compared to 15.1 million in the first quarter. Yikes. Okay, so they're actually, let's see what they're doing with their money. Let's see. Grew subscribers while maintaining low single-digit churn. Launched Curiosity Now free ad-supported streaming TV fast channel. Premiered the landmark 8-part original series Titan, The Rise of Wall Street, 6-part series Inside the Mind of a Con Artist, Red Elvis, The Cold War Cowboy, and 3 new episodes of ongoing series Ancient Yellowstone. Financial outlook for the first half of 2022, Curiosity Stream expects the following: revenue between 38 to 40 million, and EBITDA between 35 to 33 million loss. And that's going to be the first half. So revenue between 38 to 40, and they reported 17.6. So that leaves what the minus of 38 and 17.6 is. So this next quarter they're expecting 20.4 million revenue, and then the EBITDA loss, which they lost, they're expecting to lose 35 for this first quarter, and they already lost 19.3. So they're expecting to increase their revenue and decrease the EBITDA loss. So that's good. They're expecting profit margins to be better next quarter. The company is not able to provide expectations of net loss, the closest comparable gap measured to EBITDA, on a forward-looking basis, because the company is unable to predict without reasonable efforts the ultimate outcome of matters that will determine the quantitative amount of items excluded from the non-GAAP measures. That's a waste of breath. Let's see. Okay. Current assets. Let's get into this. Cash and cash equivalents. They increased 5, 6, 7 million. $7 million. And that is quarter over quarter. Total current assets actually went down by about 10, maybe $11 million quarter over quarter. And total assets, let's see, yeah, they're down 16 million quarter over quarter. Total liabilities down 2 million. Let's see, revenues up 77%, of course. Operating loss increased by about 3-4 million quarter over quarter. Net loss, here we go, net loss. So operating loss, and then change in fair value of warrants. So the stock price dipped significantly, and so the net loss actually decreased, but in part due to the share price, of course. And then the net loss per share went down. So you could look at that and say it's an improvement. A lot of that's due to the share price, because here we have the operating loss, so that's a better comparison, I'd say. Yeah, so let's see, what is the debt? Just debt securities. So let's see. Yeah, I'm not seeing a tab for actual debt that they hold, but liabilities and stockholder equity deficit in parentheses. So yeah, here's the total liabilities, but I want to know what the cash burn is. So let's see. They have their operating loss, which is just about 20 million, and then their cash on hand, just about 20 million. So, and they have short-term investments in debt securities. So this is what, 1 quarter, 3 quarters, and yeah, so 3 quarters worth of cash, and then they'll probably have to issue more stock or obtain investments in order to sustain this burn rate here. Now, I'm curious, do they have any guidance? Now, these forward-looking statements are just going to be, investing is risky, that whole disclosure. EBITDA between 35 and 33. Yeah, I'd like to see. So right now I'm thinking that they're going to have to issue debt in order to sustain their burn rate. Establishes new financial targets, including positive cash flow from operations in the first quarter of 2023. Okay, so new financial targets, including positive cash flow from operations in the first quarter of 2023, which is right about the time they run out of cash at this current burn rate. And a minimum balance of $50 million in cash, restricted cash, and available for sale investments. Yeah, so they're looking at this. They're like, yeah, we're gonna run out of cash in about a year. What do we say, 3 quarters, 4 quarters, if they sell their short-term investments and debt securities. So just about a year, which will put us in first quarter of 2023 exactly. And then they're planning on hitting positive cash flow from operations, so that they don't have to worry about any, default or anything like that. And available for sale investments. I wonder what that means, because it's not. So, positive cash flow, and meaning separately, minimum balance of $50 million in cash, restricted cash, and available for sale investments. Okay. So that'd be pretty significant if they could obtain this $50 million in cash while hitting positive cash flow in 2023. Because right now they're burning through this $20 million a quarter. Well, this quarter they burned through $20 million pretty much. But they're saying they're going to hit positive cash flow by about the time at this current 19-20 million that they're burning through. They're saying that they're going to not only hit positive cash flow from operations in 2023, but they're going to also have 50 million cash in the bank, or restricted cash, and then available for sale investments. So I wonder how they obtain this while obtaining this, but we'll see. And looks like next quarter, what they guided for, where did they guide? For the first half of 2022, which is just first quarter and second quarter. They already gave us the first quarter up here. So here, they're still going to lose money, although less. So here they're losing 20 million. Next quarter they're losing 15 million, right? Something like that. Well, 15.7 million. So they're minimizing that, and then maybe third quarter even less, hopefully. And then fourth quarter, they'd have to be positive in order to hit this 50 million, but positive by quite a bit. So yeah, we'll see. Next quarter probably be insignificant. Third quarter, maybe we reassess. Third quarter should start looking a lot better if they're gonna hit this financial target. And then fourth quarter should start to look pretty exceptional. And then maybe we reassess in the third quarter and check up on them in the fourth quarter, and then by the first quarter next year they should be looking pretty good. So we'll keep all that in mind. We'll revisit this one. Curiosity Stream.